Hey, Steve Saretsky here. Wanted to quickly put a video together to basically touch on the big news today of Home Capital Group. I've talked about this in a video before. There's a blog post on my website, which is in the description below. So essentially, just kind of try to put the pieces together here to explain it to maybe those people that don't understand it, sort of the implications of it, positive, negative. There's obviously a lot of media attention on it right now. So I mean, first off, full disclosure, I am not short Home Capital Group. I don't have any stock in Home Capital Group. It's pretty much irrelevant to me, but obviously it does have a bigger impact on the Canadian real estate market. So basically going to sort of touch on Warren Buffett's investment today in Home Capital Group, but also sort of the implications potentially on that in Canadian real estate, Vancouver real estate moving forward. So essentially, home caps come under a lot of scrutiny. Obviously, Mark Cahotis, they were essentially bleeding out. Anyways, Warren Buffett basically came in and bought them at a discount today. He's invested $400 million. He's become the largest shareholder in the company now. I believe he bought up almost 39% of the shares at a $400 million investment. But again, you have to put this into context, right? So, I mean, obviously, first of all, Warren Buffett tends to make very good business deals. He tends to cap his downside. So he's obviously gotten a very good deal here. If you actually look at it based on what Home Capital shares closed at yesterday, I think he bought them today at about a 56% discount. If you take I believe it's the 5-day moving average, it's somewhere between a 15 to 20% discount. So, I mean, this guy is smart. He does the numbers. I think Mark Cahotis is arguing that Warren Buffett doesn't know the amount of fraud that's in there, and that's certainly up for debate. I'm not going to banter on that, but basically the crux of it is Warren Buffett got a very, very good deal to purchase part of the company here, who is now the biggest shareholder of it. So there's a couple of things to look at here. So essentially, there's the underlying issues of Home Capital are still there. So, their deposits are still down about 95%. Those deposits are reliant on funding new mortgages, on keeping the business afloat. They need deposits to continue to come in, because the investor confidence is not there, right? So now, obviously, as Warren Buffett's name is now being a huge chunk of this company, I'm sure that a lot of the investor confidence will come back into the company. You could see deposits certainly start to go up. We've seen the stock price go up quite a bit today. So I think from an investor confidence standpoint, it's huge. Obviously, all these financial markets are all based on confidence, right? So I think anytime you can put Warren Buffett's stamp of approval on the company, it's certainly going to help them moving forward. Now, the question really becomes is there's still those underlying issues, right? The part of the deal was Buffett is again giving them another $2 billion lifeline, which is secured with $4 billion worth of mortgages. That's what it's believed to be. So again, he's sort of capping his downsides. Even if a lot of the mortgages are fraudulent, he is protecting a lot of his downside. A $2 billion loan covered with backed by $4 billion worth of mortgages. So there's that. But again, so they're borrowing that $2 billion at a 10%. I believe it's a 9.5% to 10% interest rate. So again, do the math. You're looking at it, if they're giving out mortgages at between 4 to maybe 5%. If you're borrowing at 10%, the numbers simply don't add up. So again, this is sort of a lifeline. It certainly will help the company's image. Does it mean that things are free and clear? No, it does not. And again, I'm not the stock guy or the analyst here. I think that you certainly do some more homework on this. This is just sort of my thoughts on it based on reading a lot of the articles, talking to some people in the finance industry and that sort of thing. You can certainly see it. I mean, obviously Mark Cahotis has been going off on Twitter, so it's interesting to sort of get his feedback on that. But that's basically where we're at in terms of sort of impacts on the Canadian real estate market. Obviously, I know the Canadian governments are breathing a sigh of relief. Central Bank Stephen Polo's. There was a lot of talk, a lot of closed door meetings about talks of the potential. People were lobbying that we got to bail out Home Capital Group. You can't have Canada's largest alternative lender fail because as much as they want to tell you that's not going to be a ripple effect through the system, it definitely is. Of course. There was a lot of stories are coming out in the mortgage and finance industry that lending is starting to got a little bit tighter after Home Capital's woes. People struggling to get financing. This is more particularly in Ontario, where I think there's a much bigger dependence on these alternative lenders. So I mean, there's that, right? Again, and there's that sort of ripple effect, right? So again, it's all these banks are dependent on mortgage-backed securities, selling these investments, raising new money for new mortgages, and the only way to keep markets going, to keep real estate moving, is you have to continue to fund more and more mortgages into the system. You have to keep pumping that in. Again, I always say this, just to break it down, to simplify it for people. When wages are essentially flat and prices are going up 20% a year, how do you afford that? It's essentially you just have to take on a bigger mortgage, and so a lot of it is predicated really on the mortgage market continuing to funnel that up, and of course that's where we've seen consumer debt levels continue to rise, which of course governments have come out and said to be cautious of them, whether or not they're actually going to do anything. They want to keep this going, so they're obviously breathing a sigh of relief. I think that will bring some confidence back into the market. Could help funnel new mortgages, could help some money start to pool back into their deposits, that sort of thing. So it's very interesting to watch, I guess, from that perspective. I think this has a lot of legs left. It's far from the end of the story. Again, as I said, they're still borrowing at 10%. They're still technically on a lifeline here. They still have to get their deposits up. And so there's a lot to look forward to. Those are sort of my thoughts. Again, I put it in a blog post. I would encourage you, again, I don't have any financial interest in this. I just merely look at it from a spectator's point of view and the impacts it potentially has on Canadian real estate moving forward. Again, it's all about investor confidence, and this is directly tied to mortgages, which of course mortgages are fueling the real estate markets. So hope that helped. Any questions, comments, I'd love to hear it in the comment section below, and if you aren't already, hit the subscribe button. All right, talk to you soon.